Good evening. Welcome to tonight's live webinar, member-only content, where we look at ASX investment opportunities in review for the 16th of November. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances, and realise that not all investments are appropriate for every individual. Investor Signals provides a broking account service where we can operate our model portfolios and an independent portfolio, as well as using derivatives to enhance portfolio returns. If you'd like to know more about it, please contact me on 1300 614 002. The technology that I'm using tonight is the Investor Signals member area. You can subscribe to it for $1,320 for the year, and a free trial is available at investorsignals.com. The graph up on screen there is the Nasdaq. It's under sell conditions. We still have concerns with the backdrop of high PE ratios in pockets of the technology area, and for that reason we're putting a support line under the recent low, and I'll update you on the blog if we see a risk off sentiment build in the US, and the first sign of that will obviously be some weakness starting to come into this Nasdaq index. But for the time being, if we have a look at the index itself a little bit closer up, we can see that the index is still above the 10-day moving average. So bringing it into screen here, so the level there's 11,660, but roughly just say 11,600 on the Nasdaq. If we were to see the index roll over, break below that, would be a reason for concern. But right at the moment, above the support line, above the moving average and the stochastic moving higher. If we look at the other main leading indices, the S&P 500, we had the buy signal there at 3,200, now pushing up towards 3,600 points. Under shorter term sort of sell, or the pivot point there being negative, but for the moment the strength is the market's above the moving average, and it's not until it trades below that we become a little bit cautious. The Australian markets had a good rally from around 6,000 points up to 6,480 at the moment. We obviously had technical issues in the market today which impacted trading, and we'll just have to see how the US futures trade overnight. If we look at the individual stocks that we're focusing on, what I wanted to do is come into the watch list here, come down, select recent blog posts. So this stores the last 30 days of ASX codes that have been tagged on the blog, so it's a good way, if you haven't read the blog or if you've missed a few days, to familiarize yourself with these names. These are the ones we're active in at the moment, and I'll organize it by percentage gains to the top, then buy signals, and we'll move through these. So TPG, I've been drawing your attention to this on the blog. We see value down here at $7. Some traders are starting to take profit up here now at around this $7.80 to $8 level, but the longer term fundamentals still should be supportive there for TPG. Deterra Royalties, this is the spin-off from Iluka. I made a post on the blog and provided a bit of detail. The company makes its profits from iron ore royalties, and on a forward cash flow basis, the company supports a dividend yield of around 5.5%. So as the market becomes familiar and comfortable with the story here, we may see a little bit further uplift. 5% yields relatively attractive. Cleanaway, we had an algorithm buy signal here at around this $2. Again, traders are taking profit where it is at the moment. Longer term investors, we like the thematic there of the Cleanaway business model, but it is low growth. We're probably likely to see flat to maybe only 3% earnings growth over the next 12 months. Fisher and Paykel, this is one to have a think about. I think even if risk sentiment sort of shifted to a little more negative in the US, Fisher Paykel's likely to do well. So I think this is a buy on the dip story. The last sell-off into the algorithm buy signal there was around $28, now pushing up to $32. We're probably more likely to see a bit of consolidation here at the moment, because certainly think about this with a support line there, maybe stop loss below 30, but good business, strong earnings growth. Brambles, I've been bullish on this for a while. We've seen it rally now from 950 up to 1080, maybe between that 11 and 1150 pulls up sort of the upside potential for Brambles for the moment, but the company is are guiding towards 3 to 5% earnings growth, just under a 3% dividend yield. And I'd be surprised if we were to see sort of a retest of those recent lows there at 9.50. I think the outlook remains bright for Brambles. REA Group, the algorithm buy signal here at around this 110 level, pushing up to 130. Terrific business, but is getting a bit expensive. Ramsay Healthcare, this is one that you can have a think about tomorrow. Buying this on the dip at around this $66, $67. And maybe thinking about selling covered calls to enhance the return. But these healthcare names, I continue to like them. Sonic Healthcare at around this $35 level is a good buying opportunity. Again, sell covered calls, you turn it into an 8 to 10% cash flow. Ansell I like. This is one that's an opportunity in the market at present. So we've been buying Ansell on this recent pullback, so that just sub $40, that still looks attractive. Beach, we've been bullish on this. It's had a breakout move, as have a number of the energy names. But we're seeing Beach rally from around that 120 level up to 155 now. Computershare, under algorithm buy signal there at 11.80, created sort of that retest of the $12 support, and it's rallied. The takeover deal there with Link is obviously helping sentiment towards Computershare. I think the downside risks are relatively contained there in Computershare. APA Group, I think this is a buy on the dip, so the correction that we're seeing from $11 back down to maybe $10.50 is an opportunity to buy into that as a trade. Fortescue, support there at around $15.50, so a test of that would be an opportunity to buy back into Fortescue again. Coles and Woolworths, we continue to like these, but don't see too much in the way of upside for the share price in the short term, albeit they are delivering good earnings growth. So we're seeing evidence of 8 to 10% earnings growth both in Coles and Woolworths. So owning those businesses and selling covered calls, driving that 8 to 10% cash flow. Regis Resources was a recent algorithm buy signal. This is a gold mining company. So whether this is your preferred one to look at, or Newcrest or GDX or the miners ETF. But Regis comes onto our radar, and we're just watching this, waiting for a break above that moving average. Stochastics oversold. We're under buy conditions, and we've got the positive pivot point there. So looking for a breakout higher in Regis. ResMed, we like this. It's under algorithm buy signals. Support there at around that $23 level, but is getting expensive. But we'd be happy to continue to buy that on the dip, given the strong revenue and profit growth. Oceana Gold, so a little like Regis. The setup's looking fairly similar. But the momentum, I suspect that where we're sitting at the moment is US bond yields have rallied, which has capped the rally in gold. So as US interest rates have moved higher, it hasn't provided the environment for gold to trade too much higher. But ultimately, we're going to see more printing of money in the US to support and stimulate the economy, and that's going to be bullish for gold. So I'd be surprised if we're not looking at supporting gold and another leg higher, but starting to develop. So you want to have a think about which of these gold names you're going to use as a way of getting exposure to that. Newcrest, I like this, support down here, but similar type of price pattern. We're going through sort of what I suspect is the last stages of the consolidation before we see a rally in these gold names, but Newcrest we like. Bega, the outlook for Bega was positive, so I continue to keep this one on the radar. Support there at around $4.94. They should deliver at least 5% earnings growth over the next 12 months, which is attractive in this market. ProMedica, so we've obviously been on the long side of this medical technology company, but up at around $32 is expensive, but the longer term story there, we continue to like that, so we'll draw your attention to when we next see a algorithm buy signal there. Cube, we're buyers of this off the $2.50 support level, now up to where I think's around full value at around $3, but certainly the longer term fundamentals support higher prices for Cube over the next 2 to 3 years. Gold Road Resources, all part of that gold basket, but just bouncing along support there at the moment. but Gold Roads, Newcrest, GDX, Miners, Regis, all those need to be on your watch list at the moment. Amcor delivered a strong trading update, so we've seen that push back up towards the top end of this resistance. So Amcor is one of the few names that I've spoken about where we're happy owning or buying this, even though it is under algorithm sell signals, just because the fundamentals are strong there. But maybe owning it here and selling covered calls is the way to think about Amcor at the moment. CBA, our preference is the Banks ETF, which gives us the global exposure, so BNKS, and we'll have a look at that at the once I finish toggling through these. But happy having exposure to the banks, just prefer to do it through the BNKS. Origin Energy, this was a counter trend trade, and we looked at a few of them over the last couple of weeks. Our main counter trend trades, just to recap, have been A2 Milk, Telstra, AGL, Origin, Woodside Petroleum, Santos, IPL, and Rio and BHP. So in the case of Origin, we've had the rally from 4 back up to 474. I could see that Origin could trade maybe up to as high as sort of that 530 level there. Crown not doing there at the moment, still struggle with the fundamentals with Crown and Star. NAB under sell signals at the moment, and the NAB might be one to have a think about if we see that risk-off move develop in the US. So if the Nasdaq breaks below that support level, then we would come back to sort of having a look at the short side of NAB, but not a trade we're in at present. South 32, this one's made its way onto the blog, just as a really one for us to watch as to determine whether a longer term recovery is underway. We haven't done too much in South 32. Our preference has been to buy BHP and Rio on this sell-off, but continue to sort of monitor the fundamentals going forward with South 32. Telstra, this has been a fabulous breakout trade. We're buyers of it down here at around this 270, 280 level, now pushing up to 320, probably back to where fair value is. Don't know that it goes too much higher at the moment. Woolworths own it, sell covered calls. Macquarie Group likely up near resistance, so we'll just continue. The earnings came in a little bit better than the market was expecting, but still well down on the same time last year. I think the number was around 23% down on the same time last year. But for the time being, it's above the moving average, but is under sort of this first sign of an interim resistance starting to develop. So we'll watch this if it starts to trade below that moving average, and I'll draw your attention to it. And there we are back to TPG. So again, what we've done there is gone into the watch list, selected recent blog posts, anything that's been tagged in the last 30 days, you can toggle through those. Another list that I wanted to cover tonight is really my watch list, where I, prior to adding the stock codes to the blog, the ideas are often coming out of this watch list where I add and remove stocks quite regularly. So let's just go through this and see what additional opportunities here that you may not already be looking at. So the VBLD is the Vanguard Global Infrastructure Fund. Now it is under sell signals, but this is a case where I think the fundamentals win out here. So I've put the support level in there at $53. It's now pushing up to 57, and it's one of our more overweight position in our high conviction portfolios and our ETF models. Brambles, I continue to like that, and we've discussed that. Bega Cheese, we've covered that. The GDX, so this is the gold ETF. So the other version of this is the Miners, MNRS, but the GDX support there at around 50. I'd expect to see that start to trade back above the average, so that's a good one to have a think about at the moment. TPG we've covered. This is another way of getting broad exposure to quality US dividend payers. So I see the downside risks relatively low within this, but the WDIV Spider Global Dividend Fund is an ETF to think about. Orica, so looking at support there at around that $15. It's rallied up, created sort of a higher high within the last month or so. sitting back at around this 1630. They're reasonably comfortable that the downside risks are fairly low there in Orica. CSL, we had owned this, had been one of the better performing stocks in the model, but not doing anything there at the moment. APA Group, I think that's one just to keep an eye on. It's a buy at 10.50, especially coming into the December dividend. Pro Medicus, we've covered that. The Cure ETF, this is one that I've spoken about on the blog and drawn your attention to. We like this. This is broad exposure to US biotech, getting back up to roughly where that initial target was when it was down at around this 55. I'd mentioned that sort of the target was maybe back up to $65. We're really there at the moment, so maybe a bit more consolidation, but certainly a good long-term contributor to portfolios. Ramsay Healthcare, so I like this again at this $66, $67 level. The B-Bus, so B-Bus, B-Boz, really the two hedging instruments for you to think about in portfolios. If the Nasdaq closes below that 11,600, might be an opportunity to think about B-Bus or B-Boz. Yank, same thing, short Aussie dollar. Probably preference at this stage is B-Bus and B-Boz as a hedge rather than Yank, but Alumina, not doing too much there at the moment, but up against resistance maybe around that 160, but keeping an eye on it. ASX, I like this. It is expensive and we're not looking at too much in the way of earnings growth, but we think the income's relatively defensive and the dividend yield is attractive, so owning it and selling covered calls in a low interest rate environment makes sense. Buying gold, so Newcrest, GDX, I think you've got to be thinking about that. A2 Milk, if you're not familiar with the impact of financials, so they were growing revenue and profit at around 30%. The latest result shows that the earnings going to be flat over the next 6 to 12 months. We've seen a big correction of share price from 20 down to $13. The stock price is above the moving average at the moment, and we could be at a stage where you're starting to see some buying interest rebuilding A2 Milk. This iShares Global Healthcare ETF, I like this. I flagged it on the blog as a buy at around this sort of $98 level, now pushing up to 104. I think that's a safe long-term contributor to portfolios. Gold Road support there at around 130. Early stages of gold, I think, finding support here and trending higher. Technology One rallied off that 750 level, not doing too much there at the moment. Sonic Healthcare, I like this, and I think that's something to think about in the market this week. Coles, I like that with a covered call. Oceana Gold, early stages of maybe consolidating and trending higher. So again, this is just a collection of codes that have been added into my watch list. So if you're not familiar with this is the short Nasdaq. So just as you might be more aware of B-Bus or B-Boz, but the SNAS here is the short Nasdaq. So just keep an eye if you see that index below 11,600 and you're wanting portfolio hedging. The SNAS is an opportunity to do that. Ansell I like, so I think this is still a buy here at the moment. So when you start, I'll summarise the names at the end of the recording. This is the Global Banks ETF that I've been discussing over recent weeks. So this seems to be a lower risk way of getting broad exposure to a recovery in the banks. It's unlikely the Australian banks outperform their global peers, so this is sort of leading heavy exposure with JP Morgan. We've seen it rally from around 440, so it's rallied a little over 20% just in the last month or so. Macquarie Telecom, this was under algorithm buy signals there at $38. It's been a strong performer since the signal. Cube we've covered, but so just to jump back to Cube, this was a buy at around that 250 at $3, maybe up against resistance. I'll keep an eye on this in a soft market. If we were to see it back at sort of 275, then I'd draw your attention to it on the blog. Northern Star merging with Saracen. Still at the moment, preference is maybe Newcrest over those, but they're all trading relatively in line. Cleanaway, like the fundamentals, safe place in a market even if volatility picks up, but not much in the way of earnings growth. Wesfarmers, more and more, I think the product mix that Wesfarmers got with Officeworks, Bunnings and Catch and you're starting to see increased advertising around their e-commerce strategy with Catch. I think that could be an undervalued asset, so buying Wesfarmers on any pullback, and you can see there where I've flagged support at $45, whether we get back down there and retest it, but certainly like the fundamental outlook for Wesfarmers. Computershare, we've covered that. The IOZ, so this is the broad XJO index, so we had the buy signal there at around 23, now pushing up towards 26. The equivalent in the US, the SPDR S&P 500 ETF, we had the buy signal there at 450, now pushing up to 490. And then the flip side of the short NASDAQ, this is the double long NASDAQ. So in the months ahead, we'll probably see the NASDAQ have a correction and a switch back to algorithm buy signals. When that happens, we'll start to have a look at the ultra long NASDAQ as a way of getting exposure to technology, but the NASDAQ is not under buy signals at present. Smart Group, not doing there at present. 4D Medical, Fisher Paykel, so I continue to like that. ResMed we've covered. Superloop, not doing there at the moment. Western Areas, not doing there. Not really on the radar. The oil ETFs, either the triple O oil ETF, Woodside, Beach, all provide similar exposure, and there we are back to the Vanguard. So just to recap, so again, tonight's a little bit different. Rather than just toggling through the ASX 100, we're kind of oscillating between sort of 1 week doing the ASX 100 and the following week just a general review of some of the lists that I manage. But just to be clear on the opportunities, so just to summarize, TPG, traders can think about taking profit. Ramsay Healthcare looks like something to consider in the market tomorrow. Newcrest, I think there's an opportunity. ASX we like as a buy right. Wes we like as a buy right. Coles I like as a buy right. Brambles getting back up to that 11 to 11.50 should capture the full recovery there in Brambles. On the gold side, Gold Road Resources, just to have a think about that. Cleanaway we like, but maybe starting to track sideways. Fortescue, if you see that back at 15.50, you want to start having to think about that. Cube at $3, maybe a little bit expensive. Try to buy it on a pullback to around 275. On the counter trend trades, BHP and Rio are rallying, so we've been participating in that. Orica at around 16.50. I think you just need to keep an eye on that. APA buying that ahead of the December dividend, so anything sub 10.50, and obviously I'll draw your attention to these on the blog as we take action on them. Bega back down at $5 would be a buy, and then on the ETF side of things we continue to like GDX, the banks which we've reviewed, the Vanguard Global Infrastructure, the Cure ETF we like, but it is maybe looking a bit expensive, and it'd be nice to pick that up on a dip. And then those counter trend trades that I've mentioned. So I'll focus on the blog over the coming days based around whether the NASDAQ stays above that 10-day moving average, and the still these healthcare names such as like Sonic, Ansell,